Last weekend, FinTwit was buzzing. The CNN Fear and Greed Index hit extreme greed. Naturally, this led to a lot of bold calls for a market top. And of course, the classic Warren Buffett quote once said, "Be fearful when others are greedy and greedy when others are fearful." But is extreme greed really a sell signal? At Aion Finance, we dug into 10 years of data and to find out. In this video, we are answering 3 key questions. 1. What exactly is the CNN Fear and Greed Index? 2. Are extreme greed readings actually predictive of a market top? And 3. What are the most profitable options trades when fear and greed run high? Hi, my name is Z, the founder of Aion Finance. At Aion, we believe history doesn't repeat, but it often rhymes. We use historical data to find the best risk-reward trades in today's market. 1. What is the CNN Fear and Greed Index? The CNN Fear and Greed Index combines 7 market indicators into a single score between 0 to 100. Let's look at the CNN website to find out what the components are. First, we have market momentum, which is the S&P 500 and its relation to the 125-day average. We have the stock strength, price strength, which is the number of of stocks on the New York Stock Exchange, not the S&P 500, the New York Stock Exchange that hit a new 52-week high versus a 52-week low. We have stocks price breadth, which is the McClellan volume summation index, which is basically a measure of how the volume of stocks that are rising versus the volume of stocks going that are falling. The put and call ratio, which is the ratio of the amount of activity in the call options marketplace, which are bullish bets on the market, versus the amount of activity in the put options marketplace, which are bearish bets on the stock market. Market volatility, which is the VIX. The VIX is a measure of forward 30-day risk in the marketplace, as calculated by SPX options. Safe haven demand, which is the performance of bonds versus the performance of stocks. And lastly, the junk bond demand, which is the yield spread between junk and investment grade bonds. Extreme greed means that there is a very small difference between there's a very tight yield spread between junk bonds and investment grade bonds, which means that investors are willing to take on more risk in the junk bonds and have more demand for junk. The Fear and Greed Index, each one of these, I believe, is calculated into a percentile, and that percentile is averaged into the Fear and Greed Index. It is currently sitting at 75, which is the bottom end of extreme greed. Next, we will answer the question, does extreme greed signal a market top? Here is a 4-year chart of the Fear and Greed Index versus the S&P 500. Surprisingly, many major tops didn't happen near peak greed. In fact, in early 2025, when the market topped, it actually topped on a fear reading right here. So extreme greed doesn't may correlate with short-term optimism, but it doesn't reliably predict tops. Lastly, what are the best options trades during extreme greed? To answer this, we're going to use our Aion backtesting methodology. We will identify a list of all trading days since June 2016 where fear and greed index is greater than 75. For every 30 minutes of every one of those days, we'll simulate buying SPY call and put options at various dates to expiration: 1, 4, 7, 14, 28, 42, and deltas 10, 30, 50, 70. We're going to hold each one of those trades into expiration and calculate the P&L and aggregate the results. Jumping into the platform, here is the setup for this analysis. It's pretty straightforward. We have here the start date of the analysis, the end date of the analysis. We add in the filter criteria, and then here we will be analyzing SPY for options pricing. Jumping into the results of the latest analysis, each one of these red bands indicate one of the days where the fear and greed hit over 75. And here is the average returns for every days to expiration delta combo. The takeaway, you see that every single one of the results for puts is red. This means that buying every day we went out and we bought puts at these expirations at this delta, and in aggregate they all lost money. Whereas on the call side, most of the at the money calls that we bought did make on average did make a small amount of money. However, you see that they don't have the blue dot next to them. The blue dot indicates that it is significantly statistically significant from the baseline result, which is basically every single day, regardless of the fear and greed indicator, we go out and we simulate buying calls. It is not particularly statistically better to buy calls during those days than any other random day. So that's what most of these results show right here. It seems that 1 days to expiration calls are statistically good to buy. What is most interesting is that these far out of the money calls are statistically good to sell because they show extreme negative average expectation. And even these two calls right here will have less than a 10% win rate as indicated by the red dot. So what does this show? Buying puts is not profitable on average. Buying calls, although it is slightly profitable, it is not statistically significant. And selling way out of the money calls, which is 10 delta calls, shows positive returns and better than baseline performance. So during times of extreme greed, don't fight the trend, but selling way out of the money calls can give you a positive edge. In summary, the CNN's Fear and Greed Index isn't a magical market top indicator, but it can help you frame the right trades, especially when paired with real data. If you want to analyze setups like this, the Aion Finance platform is in beta and we're offering free access for a limited time. Sign up at the Google form link below in the description and start trading with data, not emotions. Do you like this video? Hit subscribe and comment what you want us to analyze next. Thanks. Bye.